The United States is literally financing itself on a quarter-over-quarter basis. Talk about living paycheck by paycheck. What's the nation-state equivalent of living paycheck to paycheck? The nation-state equivalence is we have to borrow about $500 billion a quarter. Why does the U.S. want stablecoins? Because they are natural lenders to the U.S. government. Why does the rest of the world want stablecoins? Because BTC USD is the liquid pair against Bitcoin. So if you are not in the United States and you want liquidity, you get it in USDT. If you are in Nigeria, if you are in Turkey, if you are in Argentina, and you want something that isn't Bitcoin to hold digitally, you hold the digital dollar, not the Naira, not the Ghanaian cedi. It's obvious. And so look at these numbers. They now hold over $127 billion in U.S. treasuries.
Right now, the engine that runs America's financial system is breaking down. The U.S. Treasury just made a desperate move, pushing $450 billion in debt sales from quarter 2 into quarter 3. That's not a strategy. That's survival. They are actually running out of buyers for U.S. debt, and they know it. When the backbone of global finance starts cracking, that's not a warning, that's an alarm. Even with fewer new bonds in the market, yields kept rising. That's panic, and it means investors want more return because they are afraid the risk is growing. This isn't even about politics. This is the system failing in real time. Now, Jack Mallers says this is deeper than it looks. America needs to borrow $500 billion every single quarter just to stay afloat. But the world has changed. China stopped buying U.S. debt over a decade ago. Russia's been locked out. Hedge funds are backing off. Now the government wants to borrow more than $1 trillion in Q3 at rates over 4%. And no, that's not sustainable. That's lethal to the federal budget. And last week, when markets saw what was happening, stocks sank. Bitcoin fell. The signal was loud and clear. This isn't a bad quarter. It's simply the fiscal engine giving out, piece by piece. The big question now is, can a system built on infinite debt survive a world with finite trust? What Jack Mallers reveals next will shatter your faith in the system. Let's dive into clips from his session for a closer look. Please don't forget to like, subscribe, and enable notifications for more in-depth content. Thanks for joining us again. Enjoy the rest of the video.
The U.S. government has to issue debt to finance itself. Okay? It's effectively asking people to lend it money, and those people could be nation states like Japan or the UK. Those people could be hedge funds like we talked about in the Cayman Islands. Those people could be funds on Wall Street. Those people could be its own commercial banking system. Those people could be individuals. But the U.S. government is asking people around the world to lend it money. And in return, the people that lend it money get an interest, and they get paid to lend the U.S. government money, and the U.S. government pays to borrow money from us all, okay? And they do that in the form of this used treasury bonds. Now, the U.S. Treasury came out and said, we were gonna issue $450 trillion worth of new debt to finance ourselves, or excuse me, $1 billion of this new debt to finance ourselves in Q2, but we didn't, okay? We are saving it, and we're going to issue it in Q3. Okay, that is the big whoa, everyone pause the brakes. And that's what caused Bitcoin to fall a little bit. And that's what caused the stock market to fall a lot a bit. Okay, if I actually zoom in here, I can show you guys. During the July-September 2025 quarter, the Treasury expects to borrow a little over $1 trillion. You guys see that here? And the borrowing estimate is $453 billion higher than what was announced in April. Okay, so that is the shot heard around the world. Now, let me explain to you why. This is the U.S. government bonds 10-year yield. Okay, if the U.S. were to be issuing less debt, then yields should have come down, in my opinion. Now, as a Bitcoiner, do you have to understand the fiat system? No. The coolest thing about Bitcoin is you could stay humble, stack sats, go to a beach, and win. That's what Bitcoin empowers you to do. Now, the reason that this chart shouldn't be trending up and should actually be trending down is because with less debt issued, there should have been, it shouldn't have, what this is saying is there's not a lot of demand for U.S. debt, okay? because this here, let me just skip to this slide real quick. I should have reordered this differently. This is bond math, okay? It's not necessarily intuitive. Bond prices and yields move oppositely. If yields go up, bond prices go down, okay? Now, if you just think about that for a second, it's actually very intuitive, right? If the US needs to strum up more demand for its debt, they pay you a higher yield. If the US says, hey, we're looking to borrow $450 billion, and everyone says, cool, how much do I get paid for that? And they say, 1 basis point. Everyone says, oh, screw that. Okay, what about 2 basis points, 3 basis points, 4 basis points, right? And so the point is, yields go up, bond prices go down. The higher yields are, obviously, is going to tell you that there's less interest in lending to the government. The US government did not want to issue their debt in Q2, primarily for 2 reasons. One, because there's not a lot of natural buyers for the debt anymore. We know China, the global factory, the country that runs $1 trillion trade surplus, they have not been net purchasers of US debt since 2014. We know they're buying a lot of gold. We sanctioned Russia out of our financial system, so they can't even finance the United States even if they want to, right? And we've known that the United States has had a tough time finding marginal lenders to finance its deficits. We've talked a lot on this show about how there are a lot of hedge funds running a basis trade out of the Cayman Islands, but even that trade started to dry up a little bit. So we can sit here on the show and we can speculate about these things. We can try and draw conclusions based on tweets, based on market sentiment, but to see it come out from the US Treasury is very validating. The other reason is very obviously because interest rates. If you're going to be issuing debt and the 10-year is above 4%, and the Fed funds rate, the overnight rate is above 4%, that's very expensive. They just said they're now in Q3 expect to borrow over $1 trillion. Can you imagine having to pay 4+% to borrow $1 trillion? That's a really big bill that you have to finance. That's a lot of money. And so for those 2 reasons, the United States is literally financing itself on a quarter-over-quarter basis. Talk about living paycheck by paycheck. What's the nation state equivalent of living paycheck to paycheck? The nation state equivalent is we have to borrow about $500 billion a quarter. The United States has already come out and said we will borrow and we will have a little over $2 trillion deficit this year. So our run rate is, call it $500 billion a quarter. Okay. And delaying our $500 billion because we can't get the rate that we want and because there are not natural lenders to us anymore. Now, how do we know this, guys? Because we can look at the market. So this is the US government 10-year yield. And this is, now it's choppy, obviously, but you can see in the beginning of Q2, it was low. And now it is higher. So yields rose. That means bonds fell. That means demand for debt was shrinking. And this is despite an artificially scarce supply. We took debt issuance out of the market. We did not dump more debt onto the market. And yields still rose. Bonds still fell. So this is a huge problem. On top of that, here's from Bloomberg, the dollar got stronger. Dollar wraps up first month of gains since Trump took office. So we talk about weaker dollar, weaker dollar, weaker dollar, and the Trump administration is clearly in line with what is called the U.S. Dutch disease, is the pain of having a strong dollar. A strong dollar means you do not have cheap labor. It means you cannot manufacture. It means you cannot self-sustain.
Maller says the signs are everywhere, even in how the White House treats Fed Chair Jerome Powell. It's not just about rates, it's about survival. The government needs cheap debt. Fast. That's why they're pressuring the Fed. But Maller sees the next move clearly. It's not just about cutting rates, it's about flipping the system, and Bitcoin is front and center. Suddenly, there's a whitehouse.gov/crypto page. The Treasury Secretary is on video hyping innovation. Tether is exploding, now holding $127 billion in treasuries. This isn't a coincidence. This is a pivot, hard and fast. Tether's rise shows where the new power is. Stablecoins like USDT are stepping in as lenders where no one else will. Countries with collapsing currencies are trading them for access to US dollars. That demand drives up treasury buying. But here's the thing, stablecoins don't rise on their own. Their strength comes from Bitcoin. Maller calls it the Bitcoin stablecoin engine. As Bitcoin rallies, global trading jumps. That creates demand for more stablecoins. Those stablecoins then turn around and buy US treasuries. It's a loop, one that's now holding up parts of the system. Let's watch more clips from Maller's session to gain more insight.
Guys, no wonder they've been hammering Jerome Powell. Now it makes, how much sense does it make? It makes all the sense in the world. Hammering Jerome Powell. Hammering this guy. And so they need the Fed to cut aggressively, like overnight, or they need stable coins to explode in growth. They need to find new dollar demand, new demand for the debt. Okay? That's really the point. So, what do we see as a result of this? Well, the hammering of Jerome Powell will continue. It will not stop. If anything, it's going to just get worse. One way out of this is to reduce the cost to issue debt. If they can get rates to as close to zero as possible, then issuing debt is free. It doesn't cost anything. They are going to hammer this guy. Hammer him over the top of the head. They're going to try and embarrass him. They're going to try and find ways like irresponsible budgeting for his new office or whatever to try and kick him out. Now, this is Trump. This was August 1st, so only a few days ago, demanding he resigns. So these guys are very careful with their words, by the way. Trump has been hammering him, but has never outrightly said he should resign. Now we're at the point where he says, get out, he should resign. Okay? Now, what else have we seen? Guys, this is whitehouse.gov/crypto. I'm going to repeat that. There is now a website on the whitehouse.gov website. There is now a domain, whitehouse.gov/crypto. This is not a drill. President Donald J. Trump is strengthening American leadership in digital financial technology. So here's the thing, guys. We now know, like the market now knows, and it's the reason that it's sold off, that there are no marginal lenders to the United States government. The U.S. Treasury market is in trouble. Risk assets and everything is going to sell off like it has. We're going to have a repeat of Liberation Week, of Q3 last year. We're going to have a repeat unless something happens. And the U.S. government is going to go do two things. My prediction, we'll see. They're going to continue to hammer Powell. Now we know why they've been so hard on this guy. They need those rates down like they need air, or else the stock market and everything with it is going to come crumbling down. And the second is they need Bitcoin and stablecoins to go higher. Tether just released their quarterly attestation. This is the king of stablecoins, the inventor of stablecoins. Let's check in with how their business is doing and growing. Why does the U.S. want stablecoins? Because they are natural lenders to the U.S. government. Why does the rest of the world want stablecoins? Because BTC USD is the liquid pair against Bitcoin. So if you are not in the United States and you want liquidity, you get it in USDT. If you are in Nigeria, if you are in Turkey, if you are in Argentina, and you want something that isn't Bitcoin to hold digitally, you hold the digital dollar, not the Naira, not the Ghanaian cedi. It's obvious. And so look at these numbers. They now hold over $127 billion in U.S. Treasuries. They are now one of the most active lenders to the United States of America. Next, Goldman Sachs and BNY joined forces to transform $7.1 trillion money market industry with digital tokens. Guys, what did we say last episode? There's over $7 trillion in money market funds. When we lower rates, they're going to activate this. With the Genius Act, they're going to activate this. It is now a lot of the things that we've been talking about on this show, and we've just been guessing. Educated guesses, really good guesses. Bitcoiners, we know what we're talking about. We stick it to the man. But now they're starting to come true. We're seeing how fragile the U.S. Treasuries market is because they can't even issue the debt they need. We're seeing how fragile the relationship with the Fed is, that they're willingly trying to fire this man, an independent bank, because we can't finance ourselves without making our own decisions on the cost of money. We're seeing how valuable Bitcoin and stablecoins are to this country because they are the liquidity escape valve. Goldman Sachs is one of the most politically aligned, too big to fail banks in the United States of America. Goldman Sachs and Chase. The fact that they are going to digital tokenize stablecoin, the money market fund, ignore everything about this headline except the number. 7.1 trillion. That's all you need to know. 7.1 trillion. That's all you need to know. Next, Treasury Department will boost debt buybacks from the Wall Street Journal. We heard a lot from Besson earlier this year about the tactics he was going to use to help the U.S. government survive and fiscally afford itself. We heard Treasury buybacks. We heard the supplemental leverage ratio. We've heard it all. And he talked about how these things would start to come to fruition over the summer and early fall because he needed to negotiate trade deals first. Those trade deals are starting to come due. You've seen a lot of that. Trade deal with Europe over the last week came due. Now you're starting to see, here's how this works, guys. If you can't win the game, change the rules. That's how these guys play. If you can't win, we will change the rules. That's why you cannot save in dollars. That's why we cannot coexist in a fiat currency system. And so this is these guys changing the rules. They're going to go after Powell. They're going to pump Bitcoin and stablecoins. They're going to change the rules. Those are my predictions.
Maller takes it even further. He believes Bitcoin works like a sponge, soaking up liquidity, taming inflation when the government prints. In a system running out of good options, Bitcoin isn't just an asset anymore. It's becoming infrastructure. That's why the government hasn't moved against stablecoins like Tether. That's why they're building a crypto page instead of cracking down. Whether they like it or not, Bitcoin is part of the machine now. Maller didn't sugarcoat what's coming. He says the US is naked swimming in a fiscal tsunami. The debt delay in Q2 was just a patch job. Q3 is a monster, with over $1 trillion in new borrowing. If Powell doesn't cut rates, markets will bleed. He says it outright. It could get so bad that Powell himself gets pushed out, because once this wave hits, they'll need someone to blame. And when panic rises, rule changes follow. Maller says watch for all kinds of financial tricks, treasury buybacks, tweaks to leverage rules at big banks, anything to make it look like demand still exists. But none of it fixes the core problem. The system needs something new. And this is where Bitcoin stops being the outsider and becomes the only option. The sudden crypto embrace is not about innovation. It's about exhaustion. The old tools aren't working. Tether is proof. Goldman Sachs jumping into tokenized money markets is confirmation. Now that's not fringe anymore. It's center stage. Maller also points to a pattern. Federal tax receipts are now starting to mirror Bitcoin's price. He says that's not a coincidence. When Bitcoin goes up, it creates taxable events. Even if people don't sell, they borrow against their holdings, and that spending feeds the system. That's wealth creation. That's tax revenue. And that's survival for a government running out of time. It means Bitcoin isn't just a hedge. It's becoming a pillar of the whole thing. So what does that really mean? It means the government might need Bitcoin more than Bitcoin needs the government. That's why they tolerate Tether. That's why they aren't cracking down. That's why Maller believes the US might soon be holding more Bitcoin reserves. They don't say it out loud, but the actions tell the story. Bitcoin is the spark that might restart the whole machine. This isn't about price targets and definitely not about hype. It's basically about survival. The fiscal engine is choking and there's no going back. The only question now is whether Bitcoin can ignite the engine before it completely shuts down. Thanks for watching, and don't forget to like and subscribe.